We had some nice gains yesterday on our market. That's despite the weakness we saw last night in US markets. Or are we really just being propped up by all this M&A activity that's taken off?
Obviously, our local market was propped up yesterday with HSBC coming for Nedbank. So that obviously pushed the financials up quite aggressively yesterday. There's also other M&A activity around the world with BHP, HP and Dell going for 3 par. So there's a lot of M&A activity, and that started to bring a little bit of buying back into the market. But manufacturing numbers that came out yesterday in the States pushed the whole market down again, and concerns about a double dip still pertaining in the market now, and people selling off quite aggressively at the moment, going back into bonds.
And it really looks like this aggressive selling, as you mentioned, it is across the board. Gold also coming under pressure, of course, as investors sell gold to cover some of their equity losses.
Yes, obviously gold's had a very good run and people taking profit there, and unfortunately having to put it into equities to cover some of their margin calls and some of the losses there. But gold should stay up over 1200 and should be relatively firm in this period.
Rob, how's the market viewing all this M&A activity that's suddenly taken off? Because to me it would seem a sign that companies are confident to be investing at this stage, even with the fears of a double dip still on the horizon. Should we be taking it as a positive sign?
I think it is definitely positive. Obviously, the lending rates are really cheap at the moment. Some of the debt that you can use to finance these deals is very favourable. And obviously, in a very weak part of the market, it is the right time to start to buy and get acquisitions onto your book. You're not overpaying, you're getting the right price. So it is very positive, and generally it is the start of a recovery when people start to do a lot of M&A. So the market looking at it positive, but still very tentative on how much growth is going to continue in the next 6 months.
What is the growth outlook at the moment? Because as you mentioned, we had some manufacturing data out yesterday. That looks pretty negative. We've also had a number of central bank governors and central bank officials talking about economic growth. And of course, we had the Bank of England also saying that the UK risks going into a double dip recession or a second recession. So at this stage, the recovery really does look quite tentative, doesn't it?
It is starting to look tentative. I think that a double dip recession is still a little bit far away. I think that no growth or very low growth is more probable, and I think people, therefore, we see this very aggressive jump in the markets every now and again as people come in to buy and then hold back. So I think people, the conviction isn't quite there yet. So you start getting quite a volatile market where people are starting to buy at the dips, but not enough to push it through, and then it sells off again. So I think people are very tentative about the double dip, but it doesn't stop people from buying, just not enough at the moment. So the people come in patches and do buy up the market. And long term, though, these are very good levels for the market. If you're taking a 5-year view, some of the stocks are starting to show value.
Of course, US corporate earnings season well over. We're in the middle of ours at the moment. But with the US companies all having reported, the focus really has switched to the economy at this stage, and we're getting some more data out today and tomorrow. What's the market looking for there?
Well, the housing data in the States has been very negative over the last week. We've got existing home sales coming out a little bit this afternoon, and everybody's looking at those. And then we've got new home sales the following day. So the home sales is the existing home sales, and home sales are the numbers that people are looking at to see whether the American market is getting out of this recession and into recovery or not. And at the moment, people are worried that the housing market in the States will be what leads to another recession in America. So the housing numbers are very, very closely looked at, and then the jobless numbers. Again, the problem that the earnings were relatively good in the States over the last few weeks, but employment is not improving. So companies making money, but they're not employing staff, and that's a problem. So unemployment is the next number that everybody's looking at.
Well, Rob, we had Shoprite out with results this morning. It was one of the few gainers on the top 40. Just a short while ago, it was trading about 0.8% higher, and the market clearly liking those Shoprite numbers.
Yeah, it's very defensive and coming through with really good earnings. Earnings per share, I think, was about 15.5% increase in earnings, and they say they don't see too much change in the year going ahead, so they obviously still think that it'll be making money for the next 6 months. They do say that unemployment is a problem, and they're worried that going forward, people that are getting dismissed obviously won't be able to spend as much going forward, but the numbers look really good, very defensive. A little bit of problems outside of South Africa, but the South African sector of their earnings looking very positive. And it does show that the South African consumer is starting to buy again. And whether they can last through the next 6 months, we'll have to wait and see. But so far, Shoprite looking like they've had very good earnings.
Of course, those shares trading up to 83 Rand this morning, and already Shoprite was looking quite fully priced. 83 Rand, do you think it is fully priced at those levels?
I mean, it is fully priced at those levels. Problem is, what do you buy instead of buying a Shoprite, which is defensive and giving you earnings? Do you go in and try to find value in the big mining retailers, or do you go for the solid and really relatively good earnings coming through from the retailers? So a difficult call. It is fully valued, but people seem to be steering away from the riskier assets, and therefore buying continues in the retailers.
Blue Label Telecoms also up with numbers, revenue up 11%, earnings though down 6%, and it looked like there were a few one-off items included in that earnings line.
Yes, not the best set of earnings. Their cash flow amount, relatively cash flush, but it has come down 128 million Rand. Market seems to like that they've given a dividend out there, but a stock that's not really on our radar all the time. But relatively good revenue coming down 6%, very cash generative business. You would have thought they would have made more money over the last 6 months.
Rob, another stock that's probably not on your radar all the time, that's Eqstra. It was spun out, I think, of Imperial last year. Headline loss of 21 cents a share.
Yes, obviously they do a lot of yellow metals and big tractors and machinery for the mines. They say going forward they see the mining industry improving quite a bit. That's quite positive. But obviously they've had a very difficult time in the mining. If we saw that the GDP numbers came out earlier, and in those GDP numbers mining was down 20%. So very worrying, and I think that's very worrying for a company like Eqstra, where that's mainly their biggest market for their products. So very difficult times ahead for them in the next 6 months, and mining is going to have to make a big jump and go forward from the very weak levels that we're seeing now.
Rob, just in the short term, would you expect the volatility we're seeing on markets to continue, just with the absence of good news in these markets?
Yes, I think the volatility is going to continue. People really worried about this double dip recession that looks like it could occur. And as a fight off, as there's good news, as there's earnings, as there's good M&A activity, so the buying comes in. But the unemployment figures are always what push that market negative. And until unemployment really starts to improve, there's always going to be a high volatility as that market weighs whether to be in equities or whether to be in bonds.